What happens when two giants of India's EdTech world stop competing and start clinging to each other for survival? That's exactly what's playing out right now, and trust me, the story behind the headline is way more interesting than the headline itself. So here's what went down. upGrad has signed a term sheet. Think of that as a formal we're seriously doing this document before the final contract to acquire Unacademy. And here's the twist. It's a 100% all-stock deal. No cash. Nobody's writing a cheeky. Instead, Unacademy shareholders are getting shares in the combined company. It's less like a buyout and more like two shopkeepers deciding to pool their stores rather than one buying the other out. Now, the deal still needs the green light from the CCI. That's the Competition Commission of India, the government body that makes sure mergers don't just create a monopoly and kill competition. That approval window is roughly 2 to 3 months out. Unacademy's CEO Gaurav Munjal stays on, which tells you this isn't a hostile takeover. It's more of a forced alliance. There's also a break fee clause baked in, meaning if either side walks away, they owe a financial penalty. That's not confidence. That's two nervous parties making sure the other one doesn't ghost them. Now here's where the numbers hit different. Look at this data comparison on screen. Unacademy's valuation at its 2021 peak was $3.4 billion. Today, the deal is reportedly going through at somewhere below $300 to $400 million. That's a drop of over 88% in just 4 years. To put that in human terms, imagine paying 3,40,000 rupees for a smartphone during a shortage, and now it resells for 40,000 rupees because better models launched. That's not a markdown. That's a collapse. And that context changes everything about how you read this deal. So the deal is clear. But the real question is, why did it even come to this? How did a company once worth $3.4 billion end up needing a lifeline? That's exactly what we're getting into next. Alright, the term sheet is signed. But here's the real question. Who actually wins from this? Who quietly loses? And what changes on the ground? Let's start with the obvious winners. The big institutional investors. Names like Temasek and SoftBank had poured serious money into both these companies, and they were staring down what could have been a total write-down. Gone. Zero. This merger changes that story entirely. upGrad is targeting a 2027 IPO, and as you can see on screen, a larger, consolidated entity makes that pitch to public market investors a whole lot more credible. That's your liquidity path. A real exit, not a write-off. Then there's the customer angle, which is genuinely clever. A student using Unacademy to crack UPSC could, a few years later, be cross-sold upGrad's professional upskilling courses once they're in the workforce. That's not a transaction. That's a relationship spanning years. Now here's another thing working in their favor. Unacademy brings over $100 million in cash reserves into this combined entity. During a funding winter when venture capital has basically dried up, that cash is oxygen. It buys time. It strengthens the balance sheet. But, and this is a big but, not everyone's celebrating. Integration is brutally hard. Different cultures, different tech stacks, different business models. Key talent walks during mergers. That's just reality. And here's the one you might not have seen coming. Physics voila. While these two are heads down navigating a complex merger, profitable competitors can, and probably will, aggressively go after their market share. The upside here is real, but so is the execution risk. Scale means absolutely nothing if the integration stumbles. Up next, we'll look at what this signals for the broader EdTech landscape, and whether this playbook could repeat itself. But zoom out for a second, because this isn't just a corporate story. This is a signal about where the entire Indian EdTech industry is heading. And honestly, there are lessons here for any business owner watching right now. Here's the most honest way to picture this merger. Imagine two neighbors, each with a leaking boat, deciding to nail their boats together in the middle of a storm. Individually, they might sink. Together, they hope to build something bigger and more stable. But if the nailing isn't done right, both boats go down faster. That's the vibe here. And the reason it's come to this point brings us to the first thing on your screen right now. The end of the growth at any cost era. Between 2020 and 2022, companies like Unacademy raised billions on the pure promise of user growth. The market rewarded scale. It didn't ask too many questions about profit. Today, the market rewards survival and a credible path to actually making money. Which brings us to the number that should genuinely shock you. Unacademy's valuation went from $3.4 billion to sub $400 million. That's an 88% collapse in roughly 4 years. That's not a bad quarter. That's a warning signal for an entire sector. Now, what does this mean for you if you're running a business or building a startup? 3 things. First, cash is not a luxury item. It is a strategic weapon. The most valuable thing Unacademy brings to this deal isn't its brand or its user base. It's the roughly $100 million sitting in its reserves. That's what keeps you at the table when the funding winter hits. Second, and this one stings, valuation is a story. Revenue is reality. A lot of startups chased massive valuations during the boom years. The ones still standing today are the ones with real paying customers. The story doesn't pay salaries. Third, get comfortable with the idea of M&A mergers and acquisitions, where companies combine forces or one buys another. Because this is increasingly how Indian startups in EdTech, FinTech, and HealthTech are going to consolidate after the irrational exuberance of those boom years. The forward-looking question, and this is the one to genuinely watch. Can the combined entity hit profitability before its 2027 IPO target? If yes, this merger becomes a blueprint. If no, it becomes a cautionary tale that business schools will teach for a decade. Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.